Nearly 60% of restaurants fail in the first year. But here's the twist. Most don't close because of bad food, but because they run out of cash before customers even get a taste. If you think passion is enough to open a restaurant, think again. So, how do people actually get the money to open their doors? Can someone with no restaurant experience really get a loan? What if your credit score is less than perfect, or you're just starting out? The reality is, banks and lenders want to see more than your love for food. They want proof you can survive the financial heat. What are lenders looking for? They want to see collateral, a down payment, maybe even industry experience, and definitely a solid credit score. If you're missing one of those, don't panic. There are ways to work around it. For example, some lenders will accept a strong business plan in exchange for less experience, or personal assets as collateral if you don't yet own business property. Is a traditional bank loan the only way? Not at all. Traditional bank loans do have the lowest interest rates, but they're usually reserved for people with high credit, proven revenue, and at least a year in business. For most new owners, that's a tall order. Instead, many turn to Small Business Administration or SBA loans. These can offer up to $5 million in financing, often at lower rates, and you can use the funds for everything from equipment to payroll. What if you need cash fast? Some lenders have express programs. The SBA Express loan, for example, responds within 36 hours and covers up to $500,000. This is ideal if your grand opening is around the corner and you hit a last-minute snag. Are there options for people who need flexibility, not a lump sum? Absolutely. A business line of credit acts like a financial safety net. Imagine a credit card for your restaurant, letting you borrow what you need when you need it, paying interest only on what you use. This is especially handy for emergencies or seasonal surges. Can you get a loan if you're a total startup? Some online lenders focus on restaurant startups, but watch out. They may require personal guarantees or put a lien on your business assets. You'll need a credit score of at least 640, often 2 years of business history, and annual revenue of $50,000. But there are exceptions for startups with strong plans and personal backing. Is equipment financing an option? Yes, if you just need to buy ovens, fridges, or kitchen gadgets, equipment loans let you use the gear itself as collateral. It's like auto financing but for your kitchen. This can free up your main capital for other needs. What about unconventional routes? Peer-to-peer lending and crowdfunding are growing fast. Imagine pitching your restaurant idea online and hundreds of small investors chip in instead of one giant bank. It may not cover your entire budget, but it can bridge the gap, especially if your concept is unique or community-driven. So, what's the secret to getting approved? Build a bulletproof business plan, polish your credit, gather any collateral you can, and be ready to show lenders how you'll turn their money into a thriving business. Visualize this. Your business plan is your restaurant's menu. If it doesn't look appetizing, nobody's ordering, because every restaurant owner eventually faces the same challenge: how to serve great food without burning through cash. The next video reveals how to get a loan for a food truck, including creative funding moves and real numbers that can put your dream on wheels. Don't miss it.